Hi everybody, Nick McDonald here. Welcome to this week's Trade with Precision free newsletter. I just wanted to take you through this week a few of the slides from a webinar we have called the 5 Pillars of Trading Strategy. Just wanted to take you through a few of the lessons that I think are particularly important for newer traders in particular who are starting out on their journey, but also more experienced traders who just don't have a trading strategy yet and so often don't even really know what one is. So just thought I'd take you through a few of the highlights and a few of the key lessons, key areas of importance in the area of trading strategy. So first of all, we take a look on this webinar at why trading strategy. Well, what is it and why do we need one? A strategy is a set of rules, a very structured set of rules. It's like a recipe. It's like just a set of instructions of this is what we do, this is how we go about it. And if we apply those rules correctly and consistently, the reason we do that is to give ourselves an edge in the market. An edge is nothing more than probability in our favor. Slightly more chance of winning than losing. In some cases, a lot more chance of winning than losing. Certainly what we're looking for in that edge is over a large sample set of trades that we will win more than we lose, that will make more money than we lose. That's ultimately what we're after. It's all we're after. It doesn't give us any certainty on any one trade, but it does give us higher probability on any one trade, and therefore over that large sample set is what we're looking for, consistency over bigger numbers. But the majority of new traders, they go out there and they think they'll just make money without any proven plan, without any proven strategy. And the reason I think so many people do this in trading is simply because they can. It's so easy to open an account and start trading, but that does not make it easy. Just because you can do that doesn't mean you should, but so many people do. The majority don't make money though. They lose money. Most traders do, we know that, yet most traders also don't know what they're doing, and they do not have a strategy, and they do not have a consistent approach to the markets. And without that consistent approach, sure, you'll win some and you'll lose some, but it will be very inconsistent without a consistent set of rules also applied with discipline consistently. Just a quote here from Jesse Livermore: without specific, clear and tested rules, speculators do not have any real chance of success. A consistent application of that strategy leads to what we're all ultimately after, and that is consistent results. Not only do you need a strategy, but you also need the discipline to follow that strategy every single time you place a trade, and that can be really, really difficult as well. It's something that is learned. You have to have that trust, that faith, that confidence in that strategy in order to have the discipline to follow that strategy each and every time you trade. For example, if you've just had 4 losing trades in a row and you don't have much confidence in your strategy, will you place that 4th trade? For most people, the answer will be no. Even if the logical answer in their minds is yes, the actual factual thing that happens is they have 4 losing trades and they will never place that strategy, never place a trade like that ever again. But it's a little bit like I go and learn a golf swing and I go and have 4 bad swings and give up completely. Does that seem right to you? Absolutely not. Why have I had 4 bad golf swings? Because I don't know how to swing the golf club correctly yet. I need a lot more practice. And the same is not always, but very often true in the markets as well. But we need to have the good strategy. Then we need the ability to actually flawlessly execute that strategy. And then we need the discipline to execute that strategy through both good times and bad. What does the strategy look like? Well, let's have a look at what it doesn't look like. Remember, these are just highlights of the webinar we have this week. But one thing we see so many people doing is they go and react to technical analysis. Say, for example, they take this one candlestick. I don't even know what it's called because I'm not into that kind of stuff, but something like a hanging man or a shooting star or something, and those who know candles will be laughing at me thinking, ha ha ha, it's probably a hammer, or I don't know what it is. There's all these names for individual candlesticks, and people go and they react to those, and that is akin to gambling, saying there's a bearish candlestick, I think the market will go down. Actually, overall this market is in a rip-roaring uptrend and likely to keep on going up. We look at multiple factors. What is the momentum? It's up. What are the averages doing? They're fanning upwards. Where support and resistance, price here was pulling back in towards resistance, which actually ended up becoming support. We look for multiple factors and a consistently reliable strategy, taking multiple factors together and just adding probability in our favor and doing the same thing over and over and over again, having a consistent plan. Here's an example of a strategy, and this is just one time frame, but here we have an uptrend. We have price pulling back into old resistance, now becoming support. We have price fanning moving averages and price pulling back into the moving average, what we call the moving average buy zone. Not only do we then have a bullish candle, it's a small bullish candle. Then we're waiting for the break of the high of that candle, stop below the swing low of this move, protected by the uptrend, target before the big number, before the old resistance level. Now, I've said that very, very quickly. It's just, and I've probably listed 5 or 6 things already. We have in the region of 10 to 20 things for every trade we place. That doesn't make them difficult. No more difficult than taking a cup of sugar and pouring it into some baking. But we simply have multiple factors. The sugar, the butter, the eggs, the flour. We take multiple ingredients and combine them together. That's all we're doing here in the markets. A small candle, easy. Fanning averages, easy. Uptrend, easy. Resistance becoming support, easy. Multiple factors, combine them all together, and we're looking to add them together consistently for a consistent approach to the markets. The result in this trade happened to be a profitable trade. We'll show you winning trades as well as losing trades, because we do know that not every single trade is a winner. Ladies and gents, I'd just like to invite you to join us for the webinar this week. I've just taken a few highlights from there and just thought, a few bits and pieces that I would like to share with you, a few highlights for people who may not be able to attend. But we do have this webinar running twice this week, the 5 pillars of trading strategy. We go through the slides you just saw in a lot more detail, as well as a whole lot more. It's a 1-hour presentation. It runs at 2 different times this week, both on Wednesday, but depending where in the world you are, that might end up being on a Thursday. And we have a bunch of different times. Please check these times carefully to see the time in your location, and then register for a time this week that suits you. We'd love to see you there. To find those webinars, just visit our website, tradewithprecision.com/free webinars. Or you can just visit our website and click up here, free live webinars. It will take you to the page I'm on. And the webinar this week is the 5 pillars of trading strategy, and we would love to see you there. Thank you for listening. Have a great week trading. Speak to you all very soon.